Hello, in this video we'll be introducing our new Futures CFDs Daily Key Levels V3.0 indicator. This is the newest indicator from Day Trading GPS, and it is the newest version of the Futures Daily Key Levels indicator. The previous version was the V1.0 version. We did skip over the 2.0 version, and now we have the V3.0 version, which has all the same features as our other daily key levels indicators, the SPX V3.0, the NASDAQ NDX V3.0, as well as the stocks ETFs V3.0. We will also be releasing our other newest indicator, the forex currency pairs and cryptocurrencies daily key levels V3.0 later this week. So we've just released this new indicator. This indicator works a little bit differently than the V1.0 version of this indicator. We're going to start off this video by going through the user control panel and then look at all the different inputs, and then we'll go into some of the features, how to set up the indicator best for the market open at 9:30 a.m. Eastern New York time each trading day, and then go through the various new features of the indicator. Okay, so first off, we'll just take a look at the user control panel. You'll see at the top of the user control panel, there is two boxes here of information. One, the top box is the indicator information, disclaimer and risk warning, and important note. So this is just a information provided about how the indicator works, what type of symbols it works on, chart time frames, how the key levels are generated every day. Also, an important note regarding practicing with the indicator on a demo account first before using on a live account, and it goes to the reasons why. And then we have finally our disclaimer and risk warning, since all trading involves high levels of risk. So this is basically the standard risk disclosures. Okay, so secondly, we have the list of compatible futures symbols and CFD symbols. So this indicator works on all the major future symbols and forex CFDs symbols. So the forex CFDs are basically the forex versions of many of the futures, just in CFD form. So basically you have ES futures, micro ES, NASDAQ futures, micro NASDAQ, Bitcoin, micro Bitcoin, Ethereum, micro Ethereum, Dow futures, micro Dow futures, Russell 2000, micro Russell 2000, VIX futures, and then also gold, silver, and many other ones. We're not going to go through each one. And then if you're not familiar with some of these symbols here, there's also a list that has a description for each below, in case you're not familiar with what some of these symbols may mean. And then the same thing with the CFD symbols, and then there's also a list of the symbols again with descriptions. You will need to have the appropriate live data subscriptions to use this indicator on TradingView for the specific futures symbols and CFD symbols that you wish to trade. So some of the future symbols are through CME, some of those are through NYMEX. So you just need to check with TradingView to make sure that you do have the live data feed for the particular future symbols and or forex CFD symbols that you wish to trade, as you cannot use this indicator on a delayed basis. So you will need to have a paid real-time data subscription to use this indicator. Also, if you ever have a symbol that has ETH as well as regular trading hours RTH, any symbol that offers these, you're going to have to use ETH. Sometimes it's listed as electronic trading hours, sometimes it's listed as extended trading hours, depending on the symbol. If there is a symbol that you have that doesn't have that, it doesn't have either option, then normally that would be just an indication that it just trades round the clock and there is no RTH or ETH option. But in futures and forex CFDs, typically you're going to see regular trading hours and electronic trading hours as RTH and ETH. So you just need to make sure that it is set to ETH, whether that means extended trading hours or electronic trading hours for that particular symbol. Okay, so for some of you who may already have the V1.0 version of this indicator, the prior version, we had 3 different sessions that you could get levels for. You had the Asia overnight, you had the London session, and the New York session. In the new V3.0 version, there is only going to be the New York RTH session. The New York RTH session is the most important session out of the 3. It is the one with the most liquidity, and there's a couple of additional reasons why this indicator is only going to work on the New York RTH session. One of them has to do with the new market scenario analysis that is done every day. That market scenario analysis only pertains to the New York RTH session. You can still use these New York RTH sessions, throughout the cycle after the New York session closes, if you still wish to utilize the levels into the Asia and London session. But just know that new levels are not going to be generated until 9:30 a.m. the first tick of the 9:30 a.m. Eastern New York Open each trading day. So for those of you who already have the V1.0 version, that had a lot less features than this particular indicator does, the V3.0. However, it did have the Asia overnight and London levels as well. You can continue to still use your V1.0 version. However, from now on, we are only going to be releasing the V3.0 version. So if you're a new subscriber, the V1.0 version is not going to be available anymore, so it is only going to be the V3.0 version, which is the one we're going over with now. Okay, so this indicator has 10 different support and resistance levels. The first 6 levels are enabled by default, as you see here. Because unless we're going through extreme volatility, such as we saw with the COVID pandemic, or say with the 2007, 2008 financial crisis, or there's some other sort of crisis going on, or some extreme volatility event, on most days, you're only going to be seeing levels confined within R6 down to S6. But you can turn on additional levels if your particular symbol that you're trading happens to be in an extreme volatility environment. You can turn on these additional levels here. If you do turn on additional levels, or whatever levels are checked here, you also need to go and also make sure they're all checked down here. So for example, if we were to turn on 7, 8, 9, and 10, then you just simply need to go down and turn on 7, 8, 9, and 10 here, and 7, 8, 9, and 10 here. If you prefer not to see 6 levels as the default, and you prefer just to say have 4 levels as an example, then you can simply uncheck. Normally it's 6 by default, so normally you would just be unchecking 6 and 5, and then you would just come down here and do the same thing. And this is specifically concerning the R and S levels. As you can see here, this table, which is optional to have turned on, is dynamically controlled. So if you only have 4 levels, then it's going to only show the 4 levels as an example. But for right now, we'll just go back to all 6, which is the default. Here you have the bull bear key price level display settings. So we have the color and we have the width. The width of this line is set to 2. The width of the other lines is set to 1 as far as the R and S levels. The style is set to solid on all of them. You can, of course, change all these to your liking if you prefer a different color scheme, you prefer a different width, and you prefer a different line style. That's completely up to you. What this means, the key price level KPL display options. This is a drop-down menu. The default is display abbreviated text with session name and date. That would be here. You would see the symbol, the date applicable, New York abbreviated RTH, and then BBKPL, which is bull bear key price level abbreviated, then the price. If you would rather display full text with the session name and date, then if you do that, then you will see everything pretty much spelled out. So you'll have New York spelled out, bull bear key price level. That's completely up to you. These line labels, by the way, which we'll get to in a second, are also individually controlled by group, so you can make them smaller or larger. So this is the default scheme of the main levels, the main R and S levels being on large, the midpoint levels being on large, and the QL levels being on normal, and then these contextual levels here also being on large. But you can change those as a group to your liking if you prefer to have them smaller or larger. Next, you go to display full text without session name. So that's just going to be this. So this makes it a little narrower. Just really depends on user preference. Lastly, we have display abbreviated text without session name or date. So for those of you that just want the briefest amount of information here, then that's how that would look. The default is the first one here, as we showed previously. Next we have midpoint lines, midpoint labels. So by default, these 6 are turned on. We have mid BBKPL R1, mid R1 R2, mid R2 R3, mid BBKPL S1, mid S1 S2, and mid S2 S3. If you want to turn on more, you simply just check which ones you want. If you want to have less turned on than the default, then you simply uncheck which ones you would prefer not to have on. Again, you can change the color scheme, the width, and the line style. Next, we have the quarter lines, which are the QL lines. The only ones turned on by default are the QL above the BBKPL and the QL below the BBKPL. So again, the QL lines have one single purpose, and that is for tight stop losses. So if you prefer to use a tight stop loss, when we get to the trading section of this video, we'll go into the standard stop losses versus the tight stop losses and explain that. However, just for right now, just know that the QL levels above and below are above and below each of the main key levels. The main key levels with this indicator are the BBKPL, the R1 through R10, and S1 through S10. The contextual levels with this indicator are the YDH, YDL, YDC, PMH, and PML. The stop losses for these are done through the user control panel, not by using QL levels for them. And when we get to that section, we'll go over how you can select a standard or tight stop loss for these contextual levels. The reason why the QL above and the QL below are only turned on by default is that typically at the beginning of most sessions, this is going to be the level that's primarily in play at the beginning of the session, the BBKPL level. And so if you're going to be using a tight stop loss on either a bullish trade or a bearish trade, then those are turned on. If you prefer to use them on other levels later on in the session, then again, you just turn them on here in the user control panel. You can select a different color for them. This is a global setting, so you cannot select different colors for each QL level. So if you change this, it will change the color for all the QL levels. I'll just show you that real quick. Let's just say we want to change it to yellow. Then as you can see, they turn to yellow. Next, we have the display settings for the line labels. That is these here. These are all controlled by groups. The three groups here, the controls for the three groups here are the main line. So this is the main key levels, the bull bear key price level, as well as the R levels and the S levels. That's what this means. Mainline extensions, default is both. That means they're extended in both directions. You can do them as none if you prefer, or left only or right only. The default is both. This comes into play later if we're doing historical sessions. As you'll see later when we get to that section, we'll be turning all these to right only if we're going to be looking at historical sessions. But for regular day trading purposes, our suggestion is to leave them on both, but that is up to you. Mainline label offset 50. This is a plus number of 50, even though there's not a plus here. That's what this means. What this means is that the middle of the line label is 50 bars away from the current price action. If you want to make this a lesser number, it'll move these closer to price action. If you want to make it a higher number, it'll move them further away to the right. If you make this a negative number, or before we get to that, if you make this 0, then the middle will be right at price action. If you make it a negative number, then the middle of it moves to the left of price action, however many bars the negative number is. The greater the negative number, the more to the left it moves to the left. This is the line label text size, so we'll just show you what the difference is. If I want to turn these to small as an example, then that's small. You look at it as normal, normal, and then large is the default. Next, the midpoint line extension option, same thing here. You have all the same controls, same offset. So this controls all the midpoint lines by a group, just like this controls all the main lines by a group, and this controls all the QL lines by a group. So you have the same controls. Right now, as you can see, they're all set to 50, so they all line up vertically. If you prefer a different look, then you can set these all at different ones. That's why they're controlled by groups. Historical settings, we'll get back to this later. So you have a show historical bull bear key price level, show historical RNS levels, and show historical midpoint lines. Next, we have New York session pre-market values. These are the pre-market values starting at 4 a.m. Eastern New York time. So this is the pre-market high and low that occurs between 4 a.m. Eastern New York time and the 9:30 a.m. RTH session open. So these are set to 15 as far as the line label offset. So again, these are these two lines here, the PML and the PMH. They're also marked with this particular indicator with a new NY in front of it. And that is because unlike SPX and our stocks, ETFs, and NDX indicator where there is only one session throughout the day, and that is the New York session, with futures, you do have almost 24-hour trading. And so this is to remind you that this is the New York PMH. So if you're looking, you know, at 1 a.m. in the morning, this is the PMH from the previous New York session. And then these would be the previous day high, low, and close. When it gets to 9:30 of that day, say you were looking at this at 1 a.m. and then 8.5 hours later, it's now 9:30, then this will have the PMH and PML for the current session plotted here. The first tick of 9:30 open, and then the YDH, YDC, and YDL would be yesterday. So as an example, this was the PMH and PML for the Thursday, April 2nd, 2026 session. The YDH is yesterday's daily high, YDC yesterday's daily close, and YDL yesterday's daily low. What that means is that that is the prior day's RTH session high, low, and close. So that would be the April 1st. So if we were looking at this as April 2nd, and let's say we're on this bar here where it's now 11:52 in this replay on Thursday, April 2nd, this PMH and PML is from 4 a.m. to 9:30 a.m. today, April 2nd. These YDH, YDC, and YDLs are the high, low, and close of the prior days, meaning April 1st, Wednesday, April 1st, RTH session high, low, and close. RTH session defined for purposes of this indicator as 9:30 a.m. through 4 p.m. Eastern New York time. Okay, so you have the same offset here. This is set to 15 bars. You can move it, by increasing this number, it'll move it more to the right. By decreasing this number, it'll move it more to the left. If you make it on 0, the middle of this will be right the middle of where the current bar is. And if you make it a negative number, the greater the negative number, the more to the left of that it moves. So it works just like the other ones. And of course, we have the line label text size. It's now set to large. So for example, if you set it to normal, then it's going to look like that. So that's just up to you. Next, we have the width. Width is set to 2, like the BBKPL for all of the contextual levels. Then we have the default colors. You can change this as well as the line style if you prefer something else. Also, you can see New York session historical PMH and PML lines in historical sessions. That would be this here. We'll go over that again when we get to the historical section of this video. Now we have the same section for previous YDH, YDL, and YDC lines. This is set to minus 15. So again, this is 15 bars in the middle to the left of current price action. You can change this to something different, obviously, like all the other ones if you want. And this has all the same app inputs as the PML and PMH. Also, you can enable historical NY session, YDH, YDL, and YDC lines as well, which we'll go over once we get to that particular section. Next, we have enable stop loss and take profit levels for New York session PML, PMH, YDL, YDH, and YDC levels. This is enabled by default. However, it's not going to show anything unless you further enable either a bullish entry stop loss or bearish entry stop loss and take profit for the particular level that you're specifying that you want to have the levels for. We'll go over that in just a minute. We're just going to go through the rest of the user control panel. Just know that this starts off with bullish entry, stop loss, and take profit levels for these. Runs through PML, then PMH, YDL, YDH, and then finally YDC. And then there's a separate bearish entry, stop loss, and take profit section, which basically runs through each one of those contextual levels as well. Here is another information box here, which is just basically important note and risk disclaimer before enabling the market scenario table. So this market scenario table has to do with, here you'll see the MS3, that means market scenario 3. So on any given day, there's only 6 different market structure scenarios that any symbol can open in, and that is a function of 4 of the contextual levels, the YDL, the YDH, the PML, and the PMH, and the relationship between those 4 levels. And the market scenario analysis is done on the first tick of the 9:30 open. The reason it has to wait to 9:30 open is it has to wait for the close of the pre-market session so it can set what the pre-market high and pre-market low were. We'll be going over this in more detail when we get to that section. Right now we're just going to go through the rest of the user control panel inputs. But just for right now, we'll just show you. So if you do have a position for this table, which you can make top left, top center, top right, middle left, middle center, middle right, bottom left, bottom center, or bottom right. It also has a text size for the table that you can go anywhere from tiny up to huge. This table is fairly large, as you'll see here in a second. So we'd recommend that you use it on either normal or small. You can also change the colors of the background colors, text colors, etc. Comprised in this table, which you'll see when we go over that section. Also, we have market scenario labels. So as an example, if I click on market scenario label, you're going to see basically the same label here. April 2nd, 2026, New York session, market scenario 3, full gap below. So this is just giving you the market scenario number, both here and here. However, the market scenario analysis table is going to give you very detailed information. So we'll just turn that on right now. And we have this in the way at the moment. We'll go ahead and just turn this off for the moment. Okay, so here you have the symbol, session analysis for what session this is for, Thursday, April 2nd, what the market scenario is, the levels involved in the market scenario, the YDH, YDL, PMH, and PML, and their price levels, an explanation of what this market scenario means, and also tendencies, risks, reversal, or trap watches, depending on the market scenario we happen to be in. Also, since this is a gap, also key level priorities as far as a gap size changes with how large the gap is. Gives you an explanation of that. Rule of thumb, continuation versus reversal potential. Basically what this is a summary of the dominant tendencies, dominant trading tendencies and key trading characteristics of this particular market scenario. So again, there are 6 different markets. There's only 6 different market scenarios structures that any symbol can open up in on any given day. And depending on what the market scenario is, depending on what these levels are, it will give you the market scenario analysis and show you the information for that particular market scenario. We also have one-page PDF cheat sheets. If you don't want to have this on your screen, you can use these one-page PDF cheat sheets that are available via a Google Drive. You can download them, you can print them out, you can have them on your computer and just put them on a separate screen if you have multiple monitors. And instead of using the market scenario analysis table and turning that on your screen, you can instead just use the one-page PDF cheat sheets on a different monitor, or you, like I said, you could just print them out and just look at them off screen. So those we'll get to in a second, but the PDF cheat sheets are going to have a little bit more information than what you see here. There simply isn't enough room to put every bit of information here. This has all the primary information. The PDF cheat sheets have a few more bits of information that are not here. So it is a good idea to also look at the PDF cheat sheets as well as having this here. Okay, so we'll go ahead and turn these two tables back on, and we'll turn this off for now. Okay, so also you can show historical market scenario labels, and when you're doing historical session analysis, you can go, if you check this, then you will also see market scenario labels, which will give you the market structure for each historical session. We'll go over that again when we get to that section of the video. Here we have the main key levels alerts section. So the first you'll see here is the acceptable range percentage. So this is and we have the tooltip that we're highlighting here. This is a percentage of one standard key level, the distance from BBKPL to R1 or BBKPL to S1. One standard key level is also the distance between R1 to R2 or S1 to S2. So S1 to S2 and R1 to R2 is the same distance as BBKPL to R1 or BBKPL to S1. Default 85% means alerts only fire if price closes, the candle closes within 85% of one standard level from the crossed level, whether it crossed above that level or crossed below that level. And these key level alerts are available to be individually turned on for either cross and close above or separately cross and close below any of the main key levels or contextual levels. So that means the BBKPL level, all the R1 through R10 levels, and the S1 through S10 levels, as well as the YDC, YDH, YDL, PMH, and PML levels. I would not set this to anything, although you can set this at a number greater than 85%, I would not recommend that you do that. It is set to 85%, which is the max recommended as the default. You can certainly change it to a lesser number if you prefer to have candle closes, be alerted of candle closes when they are within a lower range than 85% of one standard key level. So that is up to each individual trader to decide for themselves after use and practice with the indicator as to whether they prefer a different level than the 85%. Here we have the alert label size. You have tiny, small, or normal. So alert label for close above the level is going to be green. Alert label for closing below a level is going to be red. The red label will be above the candle that closed below, while the bullish label for a candle closing above will be below the candle. Show last alert is a filter that you can turn on that, when enabled, only the most recent alert label per key level and direction is shown. So what this is a decluttering filter. So if you don't have this turned on, then you're going to see every alert on your screen for that session. The alerts that you will, if you turn on the alerts, you will see the alerts for the current session only. It's not meant to show historical alerts through all previous sessions. It's only meant for alerts for the current session. So just be aware of that. If you turn them on and wondering why you're not seeing alerts, going back days and days and days and lots of previous sessions, that is the reason why. So it's designed for current session alerts only. Now, if you don't have the show last alert only turned on, then you're going to see all the alerts as they happen. And that what that primarily means is you're going to see every alert, like for example, if you turned on the BBKPL alert, the continuous alert down here, not the 931, for the rest of the session. And let's say you had crossed and closed above, checked, and also crossed and closed below, checked. Then for the chart time frame that you're on, you're going to see every BBKPL cross and close above and cross and close below as it's happening. So let's say it crossed and closed above 5 times and it crossed and closed below 3 times. Then you're going to see all 8 of those alert labels. However, if you turn on show last alert only, then you'll only see the last crossed and closed below BBKPL alert that occurred and the last crossed and closed above BBKPL alert that occurred. So what that is meant to do is declutter your chart if you prefer a decluttered look where you're going to see only the last relevant alert for that level for the specific alert type, crossed and closed above or crossed and closed below. If you happen to have, say, 5 crossed and closed above alerts turned on 5 different levels, then you would see each one of the last alerts for each one of those levels. So what it does not mean is that it just shows you the last alert of anything in general. That's not what it means. It means it will just show you the last alert for each level that happens to be enabled for alerts for the particular type of alert, either crossed and closed above or crossed and closed below. Now, the 9:30 a.m. opening candle close, BBKPL level alert. This is a special single candle alert. So this is the opening candle alert for either a close above or a close below the bull bear key price level. So this will be for the opening candle for whatever chart time frame you have your chart on. So we'll go ahead and just look at it now. So as an example, we'll go here and line out the 9:30. We'll make this a little fainter. All right, so we'll go back down here. Turn on. Opening candle close above or below. And apply the range filter. So as you can see here, we'll turn this on normal. So as you can see here, this is your crossed and closed above alert on the 9:30 a.m. opening candle. So this is going to be your bullish signal alert. Now, when we get to the trading section of this video, we will go over how to also confirm these entries with a free tool. So you can, you'll either see a conflicting signal, which would normally mean to consider a no trade on this if you get a conflicting signal with the free trading tool that you can add on. Or if you get a confluence, if you get the bullish signal from the free tool along with this signal as well, then that is your bullish entry signal that is confirmed. Now, if this candle close above was outside of 85%, so let's say it closed up here right at R1. Move this out of the way. Let's say it closed here at R1. Well, remember that the range filter is set to 85% of one standard key level. So 85% of one standard key level would be right about here where this PMH level is for today. And above that is, of course, more than 85%, and then 100% would be right at the R1 level. So if this candle had closed somewhere at above 85%, then there would be no label here. And then that is your clue for it is closed outside of the acceptable range. Now, if you set this to a lower number, then it would be lower than that. As you can see here, it closes just about right at the midpoint level, so that would be 50%. So let's just say as an example, if I make this 40%, then as you can see, it's no longer there because we've set it to 40%. This candle is closed above the 40% level. So therefore, if you had had this set for your preference to 40%, then that would be your signal as a no trade here, at least for, as far as purposes of the 9:30 a.m. candle trade. If you prefer to only take 9:30 a.m. candle trades that only close 40% or within 40% or below, either above or below, then there would be no trade based on that. Okay, so we'll go ahead and just set it back to 85%, which is the default. The reason for the acceptable range percentage is that it gives you a gauge of the risk, because when we get to the trading section, you'll see that if you're trying to base a trade off the bull bear key price level, your tight stop loss, let's say on a bullish trade here, is going to be the QL below, and your standard stop loss is the first midpoint below. If this is closing way up here, let's say in the 85 to 99% range as an example, with this set to 85%, then it's too far out of range for considering the risk reward for these stop losses. So that's primarily the reason for the acceptable range filter. Prevent you from getting into trades where the reward to risk ratio is going to be too extended, the candle is too extended for basing a trade off of that particular level for that particular alert, the 9:30 a.m. Candle alert. However, if the opening candle had instead closed above the R1 level, then you could consider possibly a bullish trade off the R1 level. You just would not be considering a trade off of the bull bear key price level. Okay, so it works the same thing in reverse. If this was a close below and it was within 85%, then instead you would see a red label up here that would be on top of a level, a close below the bull bear key price level. And then again, you would look for your confirmation free tool indicator, which we'll go over in the trading section of this video. All right, so right now we'll just run through the rest of this inputs real quick. First off, we'll turn off this scenario label here. As you can see here, you can control the size of the label here, the text color and the background color if you wish to change that. Okay, so here are the crossed and closed above alerts. So this is the master switch. Enable crossed and closed above alerts. Then you would need to select which one you want. Crossed and closed above BBKPL, R1, R2, R3, basically every one of the levels here. You can also apply the range filter if you want. It's going to be the same setting. This is a global setting and applies to anything where a range filter is turned on. Here we have the crossed and closed below alerts. Same thing here. You have a master switch. So you have to turn this on and then you have to select which ones that you want. So these can be useful as far as alerting you to the fact of a close above, crossed and close above, or crossed and close below. So you can take a look at whether you would like to take possibly a bullish or bearish trade, depending whether it's crossed and closed above or crossed and closed below, in which again you would confirm with the other free tool, which we will show you. Okay, so another reason for these crossed and closed above alerts that you can use besides trade entries, for considering trade entries, is also to alert you when it happens to hit a main key level or a contextual level for an exit or for an adjustment to your trade. So this is basically just to be notified when it's crossed and closed above or crossed and closed below, how you want to utilize that notification of either on chart or what have you for that alert is up to you for either possible trade entry or it also can be useful for closing out trades or for making adjustments to trades. Okay, so here is getting to the bottom of the user control panel here. We have the table display settings. Both of these tables here are optional. They're turned on by default. So as an example, if I don't want to have this on my chart because I already have the line labels, then you could simply turn it off. Now you can change the position. You can also change the size. So when it's on auto, that's going to be normal size. You could change it to small, or you can make it larger. Just as an example. You can also change the position of it. You could make it at the top, say top left. Or as an example, top center. Just really depends on where you'd like to have it on your chart, if you'd like to have it on at all. We'll just go ahead and move it back down to the default, which is the bottom left, and auto, which is the default. Now, one reason why you might want to have this on is, even though it does take up some space on your chart, is, for example, if you are the type of trader that normally you only want to have um, fewer levels turned on. As you'll see here, it does reduce the size. It doesn't take up as much space. So it's just really up to each trader whether they prefer to have this on the chart or not. Some of it could have to do with if you like to set these a lot smaller, perhaps you want to have this here as a quick reference where this is maybe at a larger type than these. Just really depends on how you like to set up your chart. So just know that it is fully customizable to your liking. That's the main point. Same thing here with this this table here. This is for the PMH PML YDH YDL and YDC Levels table, which also gives the market scenario for today as well. You can simply turn it off if you feel it's not necessary to have on. So for example, if we turn off both of these, then you're just going to see this. So this gives you the most chart real estate. Now you can also change the position of this as well. If you prefer not to have it there, maybe you want to have it on the bottom right as an example. If you prefer to have it on. And of course you can change the size. All right, so what we're going to do now is we're just going to now go into more detail about certain aspects of the indicator, and we'll do that now. Okay, so what we're going to start off with is setting up your display for the beginning of a session. So at the beginning of a session, you're going to have these as the default levels on your chart. However, if you're the type of trader that normally has your chart set to auto fits data to screen, then you're instead going to see all the levels as you see here. And this is not typically what you want to see, this particular thing, mainly because this is just too bunched up looking for one thing, and it doesn't give you a granular look. So at the beginning of a session, you're mainly going to be concerned with R2 down to S2 with most symbols, and the trading is going to be centered around the bull bear key price level at the beginning of the session. So what you want to do is you go over to the right price axis, you left click on your mouse and hold down, and you simply hold it and expand your screen out till you get to the look that you prefer. So it could be R3 down to S2, it could be R3 down to S3 as an example. Or it could be even further down if you just wanted to see, say, R2 to S2 as an example. And the reason being is that you want to be able to see price action more on a more granular view. Of course, now if you prefer to see all 6 levels, that's up to you. However, I would definitely recommend changing these to something smaller, because as you can see, this is just too bunched up. So you may want to change all these line labels to something a lot smaller. But generally, I would not recommend that you start off a session with seeing all of the different levels. It's better just to go over here, kind of zoom out to something like this. Now, on some days, depending on what the gap up or gap down situation is from the previous day, the YDH, YDC, and YDL may be out of view of the R3 or even S3. It may be that these are above or below. So it really just depends on what is your focus. If your focus is more on YDC, YDH, and YDL, and PMH and PML, then of course you would just want to make sure that you have all of those levels, regardless of what these are in your screen. So it really just depends on what type of trader that you are. Again, you can take these off, or turn them off rather. And then you'll just have more of this look here. Okay, so next we're going to look at trading with the indicator. So first off, what we're going to do here is we're going to take this 930 thing away. And with your indicator, you also get a user guide and manual. And so you'll see a page here, page 18. This is one page within the section on trading with the indicator. So in this video, we're not going to go through every little aspect of trading with the indicator. It is outlined in the user guide and control manual. We're just going to touch on a few points here. And then just refer to the features and user guide, which you need to read through before using the indicator. You can look here and you'll see that we have here are some additional free indicators that you may also want to consider using for additional confirmation on trades. So first off, we're pointing out here for those looking to use other indicators for additional confirmation before entering a trade. If you already use other indicators that you like and want to use those in conjunction with this indicator for additional confirmation before entering a trade, then certainly use them. However, here are some additional free indicators you may want to also consider using for additional confirmation of trades. As pointed out earlier, you should always test on a demo account first for a good period of time before using on a live real trading account. And these are moving average ribbons. So both of these I'm going to show you that are also outlined on this page are free on TradingView. And so here we give the links to the Madrid ribbon here, which is the original one, and also Annie's ribbon, which is the one that we feel is better. However, that's up to you if you want to try both and then decide for yourself. And then here is a YouTube video on Annie's ribbon, which is also an additional thing that you can look at. And then, of course, here is the link for the original Madrid ribbon. Then we've got this pointed out here. You can watch this recent video, which was on YouTube regarding the stocks ETFs daily key levels indicator, in which we show how to use the free ribbon indicators to help confirm bullish or bearish entries at key levels, the methodology of confirming trade entries or passing on them if you get conflicting signals by using the ribbon as an additional confirmation indicator. So that is going to be the same method, even though this is videos link here is concerning the stocks ETFs daily key levels indicator for purposes of either helping to confirm a bullish or bearish trade entry, or for passing on an entry if you're getting conflicting signals. That process, is going to be the same on any of the daily key levels indicators. So even though this is about stocks ETFs, this particular video, the same thing applies here with the futures CFDs indicator, as well as the other daily key levels indicators. Okay, so as an example, like I said, as we pointed out earlier, we have the 9:30 a.m. opening candle here. We're on a 2-minute chart. The recommended chart time frames with this indicator are going to vary. That's something that's also pointed out in the user control panel, as well as the indicator information box at the top of the user control panel in that information box. And the reason is that unlike, say, our SPX index indicator or NASDAQ index indicator, which are 4 singular symbols, SPX or NDX, the futures indicator works on dozens of different future symbols as well as many different forex CFD symbols, not just one symbol. So there's not going to be one uniform singular time frame that's ideal to use for each of those symbols, because each of those symbols has different volatility characteristics, different average daily ranges, and different liquidity levels of liquidity. Some are a lot more liquid than others. So it really just depends on a couple of different factors: the liquidity level of the instrument you're trying to trade, and range, etc. So with something that is very liquid, such as NASDAQ E-mini futures or S&P 500 E-minis or Russell 2000 or something like that, or the Dow Jones futures, gold futures, crude oil futures, generally, somewhere between the 1 minute to 5 minute time frame. The indicator works on chart time frames of 1 minute up to 30 minutes. So remember, this indicator is for intraday day trading, intra-session trading only. It's not meant for swing trading, as an example. So the time frames that it's going to work with and support are 1 minute up to 30 minutes. So that means 1 minute chart time frame, 2 minutes, 3 minutes, 5 minutes, 10 minutes, 15 minutes, and 30 minutes. And it also depends on the type of strategy that you're using. We outline the daily key levels trading strategy, which we show in our videos on our YouTube channel, and it's also outlined in the user guide and manual. However, it's not necessary that you use our daily key levels trading strategy. These levels can be used very effectively for all other types of major trading strategies. So if you have a different type of trading strategy that you prefer to employ, the main advantage of this indicator is going to be the structural intelligence that it gives you every day at the market open, with the market scenario analysis and all the different key levels and contextual levels as a framework on a daily basis for working off of. As you can see here, we're on a 2-minute chart. We used a 2-minute chart on SPX. ES is basically just another form of instrument on the S&P 500, like SPX is. So this is the futures instead of the S&P 500 cash, which is the SPX. This is the S&P 500 futures. So same type of liquidity. We have found the 2-minute chart to be the best performer for SPX. However, still with ES futures, you may prefer to use even a 1-minute chart, or you may prefer the 3 or 5 minute. It's just really up to each trader, and also can be a function of what other additional indicators they may be utilizing for confirmation of trades. So for example, we'll take a look at these 2 ribbons here. First, we'll look at Annie's ribbon. Okay, so as you can see here, we have the 9:30 a.m. opening candle. We have the BBKPL opening candle bullish, close above, alert label that's come on saying that it's within the acceptable range, set within the acceptable range filter. So this is your bullish entry signal if you want to take a trade off of the 9:30 a.m. opening candle. Your stop loss, we'll go back out here and get these levels back in. Your stop loss on this trade, you're taking the trade off of the BBKPL, that's the level you're basing it on. Your tight stop loss is going to be the QL below the BBKPL. If you prefer to use a standard stop loss, it's going to be the first midpoint below the BBKPL. If instead this was a bearish trade, then the tight stop loss in a bearish trade on a bearish trade taken from the BBKPL would be the QL above, whereas the standard stop loss in a bearish trade from this level would be the first midpoint above. It works the same off of all the other levels as well. So for example, if you were taking a bullish trade, let's say you kind of passed on this trade here, and instead you were looking to take a bullish trade off of the R1 level. Well, you would go into if you wanted to use a tight stop loss, you go into the user control panel and you do QL below R1. Now you can turn these on in advance too. It's just that the QL above and QL below are only turned on by default. You can certainly turn the other ones on at the beginning or before the session starts, so you already have them ready to go if your preference is to use tight stop losses on levels rather than standard. So for example, if you were doing a bullish trade off of R1 because you chose for whatever reason you wanted the opening range to play out before you got involved in any trade, or maybe you're the type of trader that doesn't like to take any trades before 10 a.m. as an example, and you're just looking for something after 10 a.m. or even if it was in the afternoon, just for whatever reason you don't like taking trades in the beginning of a session. So you have the same situation here. You have a green ribbon that's all green, and then we have the close above R1. So if you were taking a bullish trade off of R1, you wanted to use a tight stop loss, it's QL below R1. If you wanted to use a standard stop loss, then it's the first midpoint below R1 since this is a bullish trade. If instead we were taking a bearish trade off of R1, which in this case we would not have a reason in this particular session to do so, but if we were looking at doing that, then we would simply go into the user control panel, we would turn on the QL above R1, and if we were taking a bearish trade off of R1, then the QL above R1 is our tight stop loss. The midpoint above R1 is our standard stop loss. Now, in this particular example here, we were showing the 9:30 a.m. opening candle. We have the bullish alert here. At the time that this is happening, on the close of this candle, the ribbon is all red. Excuse me, it's all green. Pardon me. So that is your entry confirmation from this tool. Now, if we take a look at the other one, you'll see the Madrid ribbon is very similar. One of the differences is it doesn't have the two thick yellow MA lines like Annie's ribbon has, which are very useful. However, it is similar in all other aspects. The main point is that the ribbon is all green. If this ribbon was red and green, or let's say it was all red, and we had an up candle, a bullish BBKPL bullish candle in the 9:30 a.m. opening candle, and let's say this was red, or it was part red and part green, then there would be no trade because you're getting conflicting signals. What you're looking for is confluence with the confirmation tool and either the close above the level or the close below the level in question. Okay, we'll go back to the Annie's ribbon here. Now, as you can see here afterwards, it does start to turn, and we can look here. You can see part of it starts to turn red here after we entered. However, the point is that if instead this was red here, partially red and partially on this particular candle, then that would be your caution signal to not do that trade as you're getting a conflicting signal because the ribbon is partially red and partially green as opposed to all green. Or, as we stated, if you were getting this up bullish signal here from the daily key levels indicator and this was all red, then that again, that would be a conflicting signal and no trade. As you can see in this example, it did not hit the tight stop loss or the midpoint, the standard stop loss, which just happens to be the exact same price as the PML in today's session. Doesn't happen that often, but in this particular session it did. Now what about taking a trade off one of these contextual levels, like the PMH as an example, pre-market high. Break above the pre-market high. We'll go back to the user control panel. We can go down to that section and we have stop loss and take profit levels for these particular levels here. And let's say we go down to bullish entry stop loss for PMH, pre-market high. As you can see here, we can choose either standard or tight. We'll move this out of the way. Okay, so if you were taking instead, you were going to base the trade on a break above the PMH. This would be your standard stop loss if you chose that. If instead we chose the tight stop loss, then it would be here. Now you can change the offset on these, like we said. Let's say if I wanted to make it -5 as an example. I can move it more towards the left. Just really depends on how you prefer the setup. And you can also change the size. Right now it's on normal. Let's say if we put it on large, here controlling the size of this line label. So you can see here we have bull, TI stands for tight, stop loss, PMH level is this. If we instead changed it to standard, then it's that. Let's go back to tight. Now you can also change whether you want the line to be dotted, solid, or dashed. You can also change the line width if you want to have it thicker, as an example. Okay, so now we'll just look at the take profit on this trade. So we'll go back to the user control panel. We go down to the bullish section. You see here, enable bullish entry take profit. So the reward risk multiplier is here. You simply turn on that. It's set to a default of 2. So there would be your take profit here on a reward risk multiplier of 2. So what this means is that the reward, the target, is twice the distance from the level that you're taking the trade from than the distance of the tight stop loss. If instead we were using a standard stop loss, as you can see, it would increase because the stop loss has increased. Now the take profit has also increased because now we're still at a 2-to-1 ratio. And since the amount of distance in the stop loss has increased, the amount of distance in the target has also increased. Now these are also configurable in 0.25 increments, so you could go up. So in other words, we're changing to 2.25. And then as example, 2.5, and now 2.75. So at 2.75, we should be right around the YDL level. So if we were targeting the YDL level, we would just leave it at 2.75. That's one way you can utilize this. If you want to just increment these up to another key level that you want to take a profit at and just leave it at that reward risk, or if you just want to set the reward risk to a specific number, this will go all the way up to 30 in 0.25 increments. Now, if you were just trying to do a micro scalp, let's say that, for example, you were doing a tight stop loss instead, and we were just trying to do a micro scalp, you can go below 2 if you prefer. Say you could just do 1-to-1. Then I'd put it there. You can go all the way down to 0.25. Like I said, 2 is the default. You can go all the way from 2.25 all the way up to 30. So just as an example, we can see where that takes us here. That takes us on a tight stop loss all the way up to just beyond R5. Of course, if it was on a standard stop loss, it would be a lot higher than that. So this allows you to set the take profit based on volatility of the market. If we're in a very volatile market where we are potentially going to see, R4 through R6 or even above R6, or in the reverse, bearish, down to S4 to S6 or beyond S6, then you can use this to do longer intraday trend trades as well if you want to go way up from the default of 2. Now you don't necessarily have to use the reward to risk part of that section. If you just want to use the stop loss part, you can also just use the key levels as your take profits. So for example, the midpoint levels, the main key levels, the R or S levels, depending on the bullish bearish trade, and or the other contextual levels. So you don't necessarily have to use this. This is just an additional tool. You want to have an exact reward to risk ratio that you like to keep your trades consistently within, or just want to do a specific one for one specific trade, then you can do that. Or you can just simply use the tight or standard stop loss and then use as your exit one of the other key levels or contextual levels. Okay, so we'll turn off this part now. With this indicator, there are two different types of trades. This is all outlined, by the way, in your user guide with our daily key level strategy. So again, as we pointed out, you don't have to use our daily key level strategy. You may have seen our daily key level strategy on some of our other indicators, which for the most part, that's what we've posted on our YouTube channel so far, is primarily about SPX, NDX, and the stocks ETFs indicator. We have not posted many videos about the future CFDs indicator up to this point because we knew we were coming out with this V3.0 indicator, and we wanted to hold off until we had done that. So we'll be posting some more videos on trading with this particular indicator. So we'll just go over the basics right now, and you can also read through the user guide and manual for more details. We're not going to go into every aspect of it in this video, but just in general, with the daily key level strategy, there are two different types of trades that you could take. One is a scalp only trade, and the other is what we call a regular trade. Now, on a scalp only trade, you are looking for a one level move in your favor. The one level move is calculated from the level that you're taking the key level trade from, that you're basing it on. So we'll just take this one as an example. This is a bullish play off the 9:30 a.m. candle on the BBKPL level. These are our tight stop loss, our standard stop loss. Now, a scalp is going to be a one level move in your favor. Now, with futures, a lot of people sometimes like to do uh, scalps that are somewhat less than perhaps they do with SPX, because in SPX, you have to remember that you're using options. And with options, you're not really having as much of a precise entry as you would have with futures. So with futures, if we're entering on this candle here, that means that we are entering on the close of this candle if we're going to take the entry on this 9:30. So for as an example, the close of this candle here, 65.37.25. So we're entering here. Of course, there could be some slippage, or your entry actual executed price could be somewhat less than that or somewhat more in a faster moving market. So just keep that in mind. It also depends on whether you're using a market order or a limit order. That is also gone over in the user guide and manual, the difference between those types of orders if you're not already familiar with it. And we have our stop losses, which is either tight or standard here. And the one level move in your favor is going to be calculated from the level that you're taking the trade from, in this case, the BBKPL level. And so your scalp exit would be a hit of the R1 level 65.54. So on this particular trade, let's say we got in right at the close at 65.37.25. So that's roughly 13 points. So on per contract basis, on a regular E-mini contract, that trades in $50 a point, so it's $12.50 a tick, 4 ticks in a contract. Obviously, if you're trading micros, there's 10 micros for every regular E-mini. So on micros, it's going to be different. Some people prefer to trade 10 micros rather than one E-mini because it gives them a little more flexibility as far as scaling in and out of trades. As an example, some people might have an initial, let's say if they're ready to allocate 10 micros, they might get into a few micros here and see if they get if they get a dip, or they might want to add on a dip to lower their average cost. That's up to each individual trader to do. We're not saying to do that. That's really for up to each trader to decide for themselves if they prefer scaling into a trade rather than just going into a full position on the initial signal. So that's up to each trader to decide for it themselves. But as an example, if you are a scaling in type of trader, then you would, scale in part of it here, and then on this, assuming it doesn't go down and hit the stop loss, when you see a dip in resumption, then adding some more contracts up to perhaps the total full position allocation that you're willing to do per trade. Then on the exit, you have a hit of the R1. Now you can either place with futures a little bit different than SPX because SPX, like I said, the entries are not as precise with SPX because there's no direct vehicle to trade SPX. You're trading options which have a delta, and they also have time decay. They also have implied volatility, which adds a premium. So, there's several different factors taking place there. Whereas with futures, you don't really have any of that. There's no time decay. There's just basically a precise entry, much like buying shares of stock, so to speak. So, you are more of a precise entry. So, with exits, you can either this one level move scalp exit, either place the exit at exactly 65.54. So put in your sell to close 65.54, or consider this basically as zone. So what I mean by that is you could place it a couple ticks below your sell order or a couple ticks above, or you could put it exactly as that. Whereas with SPX, we're looking for a hit of this exact thing. Whereas with futures, you can look more of a zone. So a couple ticks above, a couple ticks below. You could place the order a couple ticks above or a couple ticks below, or exactly right there. It just really depends on your preference. Now, on a scalp, you are exiting 100% of your contracts. So that works just like with the SPX. Scalp, we're looking for a quick in and out, and then we're either closing up shop for the day, or if you are the type of trader that likes to trade multiple scalps per session, then you're just simply looking for the next trade opportunity after that on whatever key level it happens to present the opportunity on for a bullish or bearish scalp opportunity. The other type of trade is a regular trade. So a regular trade differs from a scalp in a couple different ways. A regular trade, you're looking for a 1.5 level move minimum in your favor. And then you have several different options at that 1.5 level move in your favor. So the way you figure the 1.5 level moves is the same way with the scalp. So you're looking in the direction of the trade. You're looking from the level you're taking the trade from in the direction of the trade, which in this case is up. Here's the one level, so that's a scalp. So you look at half level above that, that's this midpoint here. That is your 1.5 level move. So again, the same thing. You can look at it as exactly 65, 70, 75 with futures, or one or two ticks above or one or two ticks below, looking at this as the 1.5 level threshold zone. Then when it hits that zone, you have several different options. One is that you can adjust your stop loss to break even and retain all of your contracts. Moving it to break even means moving it to the price that your initial entry was executed at. So if our initial entry was executed at 65.3725, moving it to our stop loss to break even. Remember, our initial stop loss is these levels here, one of these levels, tight or standard. Moving it to break even means moving it to the price that the trade was executed at. Or you can keep all your contracts and move it to break even plus an initial profit buffer. How much of an initial profit buffer is done a little bit different than it is with options. With options, we're looking at a 10 to 15% initial profit buffer because of the way options are. However, with futures, we're dealing in ticks. You can look at it in ticks or a point value. It really just depends, and it would vary from trader to trader depending on what they feel most comfortable with. The main thing you just need to keep in mind is at the beginning of a trade, if you're looking for a much more extended move, you need to give the trade a little bit of room to breathe. And really it's just to practice and trader preference as far as the risk profile, how much of a profit buffer that you want to add on. So as an example, you could, if you wanted to use the key levels, you could, as an example, you could go to the QL below R1 since our trade started here. This is the zone we're looking at here. So moving it up a notch would be here, 65, 45, 75. That would give you, roughly 8 points. You could just add, uh, you know, 4 ticks. That would be 1 point. 8 ticks, 2 points. 12 points. 12 ticks would be 3 points. It really just depends on whether you want to use the levels as your guide, notching it up, or if you just want to go with a certain amount of ticks that you feel comfortable with as far as doing that. The other option comes into play, and that is scaling out, closing out the majority of your position and then managing remaining runners. So this is only going to apply if you are trading, say, 3 or more contracts. So that would be either 3 regular E-minis or 3 or more micros in the case of ES futures as an example. So what you're looking to do then is at the 1.5 level move zone on a regular trade, if you're going to go with this option, you would exit somewhere between 60% to 90% of your initial position, and then you would adjust your stop loss to break even or break even plus a small profit buffer on the remaining contracts. Then the idea is that at each succeeding level move in your favor that occurs after the 1.5 level move in your favor, at each one of those continuing level moves in your favor, you are then making another decision about what to do with your remaining runners. Do you want to exit some of them? Do you want to further adjust the stop loss by adding an additional profit buffer or moving it up to a different level in your favor? Or some people just like to put on a trailing stop loss. That, of course, is another option. Works a little bit better with something like futures or shares of stock than options generally. But a trailing stop is another way to go if you prefer just to trail it up and then let the trail eventually take you out of the trade, and then it's just going to go up however far it goes up until it happens to reverse and hit your trail. Again, there's really no hard and fast rule about trailing stops. There's all different types of trailing stops. There's standard trailing stops. There's risk reward trailing stops. There's ATR based trailing stops. So really that's up for every trader to decide, for themselves what kind of trailing stop they prefer to use through practice. But so you can either use a trailing stop or you can just use adjusting to another hard stop. And adjusting to another hard stop would be continuing to move up. Let's say we move up to R2 from this 1.5 level zone. Well, now we want to maybe move our stop to the QL above R1 here, or going to the mid R1, R2, down to the 1.5 level. It just really depends on how much more profit you want to continue to lock in. Eventually, you will get a retrace back, such as this. So you just have to keep that in mind that, we can let this play out a little more here by just going forward. you know, and a lot of this is pretty typical. We did get this huge surge here, and then there's a lot of profit taking that takes place, and then price begins to go sideways. So it really just depends on, you know, how tight of a stop you want to keep on your remaining runners. The whole general idea is that at the 1.5 level move in your favor, you are taking the majority of your profits on your contracts. Then you are de-risking the remaining runners by moving your stop to at least break even on those remaining runners, or break even plus a small initial profit buffer. And then you're riding momentum as price continues to trend in your favor by further adjusting your stop loss, however much you want to continue to do that, and or taking off additional remaining runners to where finally you just have one remaining runner, and then you're just basically managing that to the end of the trade. Whether you have a specific target in mind, such as a YDH level or an R3 level for the remaining runner, or just putting a trailing stop on the remaining runner and let it go wherever it's going to go. Okay, so we're not going to go into too much more detail about trading during this video. Like I said, you can watch some of the other session videos on our YouTube channel to get more of an idea. You can also read through the user guide and manual for that. Also, as we pointed out earlier, you don't have to use our daily key level strategy, as the main point of this indicator is not necessarily the daily key levels trading strategy, but um, the structural intelligence and framework of the indicator with the daily key levels, contextual levels, and the market scenario analysis. Okay, so next we're going to go into the market scenario analysis. Okay, so the market scenario analysis. So as we pointed out earlier in the inputs, we'll go down and we'll turn on the table, at least for this one up here. So this we have market scenario 3, full gap below. So as we mentioned earlier, there's only 6 different distinct market structure scenarios that any symbol can open up with on any given day. And that is dependent upon 4 different levels out of these 5 here. So the 4 are the PMH, PML, YDH, and YDL. So if you have your market scenario analysis table on, as you can see here, this is set to normal, so you can see how much room it takes up. Set to normal. You can set it to something that is less, for example, small. Everyone's eyesight's different. Everyone's zoom on their browser's different, so it just really just depends on what works best for you. Also, before we go into this, we're just going to show you that you do get a, in the user guide manual, there is a page on this, or a section on this, rather, that on the market scenarios, in which contained in that section, there's also a portion about the PDF cheat sheets. So we'll just go ahead and show you those now. Okay, so you'll get a Google Drive link to this. You can print them out. You can download them. If you do want to print them out, they are in the 8.5 by 14 format. So please adjust your printer to print 8.5 by 14. They're on legal size. Also, when you're viewing, you might want to change it to 125 or 150 to easier reading and viewing. So it starts off here with a summary of each one. Market scenario 1, inside yesterday's range. Market scenario 2, full gap above. Market scenario 3, full gap below. So keep in mind that these are full gap above and full gap below. So the difference is that full gap above means that the entire pre-market range, pre-market low to pre-market high, is above yesterday's daily high. not just that the open is above yesterday's daily high. So this is more of a true full gap where the entire pre-market range is above yesterday's daily high. And same in reverse for a full gap below. The entire pre-market range gaps completely below yesterday's RTH session low YDL. Top overhang poke above, bottom overhang poke below. Market scenario 6, the highest volatility scenario spans both sides. That means that the pre-market range is completely outside yesterday's RTH high and low. So that means the pre-market low is lower than yesterday's daily low, and the pre-market high is higher than yesterday's daily high. So it's a brief explanation of each. There's basically a standard note and risk disclaimer here. Then you have each one of these. We'll kind of zoom out. Each one of these, some are longer than others, has a visual structure, another explanation, what the market scenario number is, primary tendencies, key trading characteristics, and what to expect. Some of these will have more information, just depends on the particular market scenario. So in this case, full gap above, same visual structure, explanation, tendencies, key trading characteristics, key level priority. If you see key level priority in any, either on the market scenario analysis table on your chart or in these cheat sheets, what the key level priority means in the context of this is the key levels priority of the four contextual levels that comprise the market scenario analysis, not the main key levels. So this has to do with the PML, PMH, YDL, and YDH key level priorities for this particular scenario. As you can see here, gap size matters as far as what the key level priority is. So depending on the size of the gap, and it explains that. Any additional characteristics, and then also some tips here at the bottom. Full gap below, basically the same format, a little bit different information here, continuation versus reversal potential also added here. Top overhang poke above, tendencies, key trading characteristics, what to expect, and some tips. Bottom overhang, basically the same exact thing. Also, as an example, you'll have a tentative bearish bias as the giving you an additional kind of a warning here. Tentative bearish bias may not hold is the general characteristic here. And on top overhang poke above, tentative bullish bias. So these are good to study on your off time. You can also, as I said, download them to your computer, print them out, study them offline, have them up on a second monitor if you have multiple monitors, if you prefer not to have the market scenario analysis table on your screen, as it does take up a lot of space on your chart. Finally, market scenario 6. This is the most volatile of all of the market scenarios. Some people prefer just to trade market scenario 6 because of the volatility. So some people just make a very good living off of trading market scenario 6 only. They only look for symbols in which that happens to be the case. It doesn't happen that often, but when it does happen, typically you're having very wide range days in which there's a lot of opportunity for day trading. However, that you have to be extremely cautious because along with that high volatility comes a lot of whipsaws, comes typically a lot of fast action, and you can lose a lot of money very fast in this, especially if you don't have a lot of experience trading. So they can be very fruitful for those that know how to trade because you're getting typically very wide ranges and have a lot of volatility, but they can also be disastrous for people that don't know what they're doing. So if you are going to trade and you don't have a lot of experience and you do want to try to trade it, I would first try to trade these on a demo account, which is a good idea in general, to trade on a demo account before going on to a live account so you can get used to trading with the indicator. That applies to any indicator, not only our indicators, but even if you're trying to use a free indicator or if you pay to get another indicator for another company. You should allow yourself enough time to get to know the ins and outs of the particular indicator by getting used to it. The amount of time will just really just depend on the amount of sessions that, what I mean by that is the amount of sessions you may need to demo trade to get fully used to executing trades with and managing trades with the particular indicator. It could be somewhere between 25 and 35 sessions. It could be as little as 5 to 10 sessions if you already have a lot of experience already, or if you have no experience, maybe a lot more than 35 sessions. So it really just really depends. So eventually that's up to each individual trader to decide. If you're going to jump in and start trading without demo trading on the indicator first to get used to it, then I would uh, that's typically not a good idea, no matter what indicator it is, if you're trying to trade with a new indicator. But again, that's up to each individual trader to decide for themselves. Okay, so now we'll go back to the chart. So as you can see here, this is pretty much the same information. There'll be a little bit more information on the PDF one-page cheat sheets than we have here, just because of the amount of space that we have to work with on the chart. Also, the PDFs can be a little easier to look at because they are color-coded and laid out a little bit differently since it's a PDF. But nevertheless, it is also available here. All the primary information for each one is here. Now, you do also have the market scenario labels. These are maybe not as useful in a current session as far as having it on your chart here, since you do have the market scenario here, you do have the table. If you didn't want to have this up here or this on your chart, you just wanted to know, then this can be convenient for just knowing what it is, because it is just right after the the current candle. So it just kind of gives you more flexibility in that. Where these become most important is when you're looking at historical sessions, because these labels will be in each historical session. And historical sessions can be very useful as far as analyzing your trade setups and trying to narrow it down as to seeing patterns of whether your particular trade setups or the particular key levels you prefer to trade perform a lot better during certain market scenarios rather than others. And then you can come to the conclusion after analyzing that either you size down during certain market scenarios that don't favor you as much and size up in ones that do typically favor your setups and provide consistently, historically, more profit on those days, on those structures, than when you're perhaps trading the same setups in other structures. So it can be very useful from that aspect as well, as far as studying and analyzing historical sessions. So for example, here in this particular scenario today, as you can see here, gap fill attempts. So in market scenario 3, full gap below, the tendency is that the market often rallies towards YDL to try to fill the gap. So these mean this is not 100%, as by this important note down here that these tendencies are probabilistic, not deterministic. Always confirm with price action volume and broader market context. News, economic releases, and overall market sentiment can override structural tendencies. So what that basically means is, nothing is 100%. So these are simply the dominant tendencies and key trading characteristics for this particular market scenario. That doesn't mean that 100% of the time, each different time there's a full gap down, it's going to always go back up to the YDL level. That it just means that most of the time it does, and that is the dominant trading characteristic, and that is exactly what happened in this session. It not only went up to YDL, but it tried to go up all the way to YDH actually. So that is another aspect of how these can be very useful, that you can look at YDL starting out the session as the true main target for this. Because just because it tries to go back up there, meaning go back up to this zone, that doesn't mean it's going to break above it. Means that the dominant tendency is that it tries to go back up here. So again, you're looking at these more of a zone. So if you're trying to do an exit here, either place it at exactly 65.98 or somewhat above or somewhat below. Just look at this and all of these as basically general zones. Okay, so now you can read more about the market scenario analysis in the user guide manual. We're not going to go into every aspect of it in this video, so I'll just leave that up to you to look at the user guide manual, and now we're going to look at historical session analysis. Okay, so now we're going to look at the historical session tools that the indicator has. First thing we're going to do is we're going to turn off this market scenario analysis table. And now we're going to set up the chart for looking at historical sessions. So the first thing, we'll just take this out of replay mode. Get rid of these two here. We'll go ahead and get rid of this table here. This is what I would suggest that you do if you're going to look at market scenario historical sessions. Turn off the tables. We'll turn off this alert label here. And we're going to set everything back to default to begin with. So we'll reset settings. All right, so we'll just start off here by turning off these two tables. Just want to look at this as far as starting. How do you do this starting at the default? So that's why I went back to that. Okay, so turn off the two tables. First thing we're going to do is you have to first decide how many levels you want to look at. Do you want to look at all 6 levels? Or do you want to look at just more levels or a lesser amount of levels? So for right now, we already went through how to turn on and turn off the levels depending on how many you want to see. So in doing historical session analysis, first off, you decide how many levels that you want to take a look at as far as the main key levels. We're just going to do this starting at 6. You want to look at less, and we already went over how to uncheck these here and uncheck these here and here to get to less, or checking more here, and then making sure they're both checked here and here. But for purposes of this video, we're just going to leave it on these 6. The first thing you need to do is you need to change everything to right only. So where it's both, you change this to right. And that's because we want every session to be right only lines. If you leave it at both, it's just going to look very confusing and way too many lines. So you definitely have to change this to right. And if you also want to look at historical pre-market high and low, you also need to change that to right. By default, the YDH, YDL, and YDC just to the right by default, so there is no option to select both or left or right on those. The second thing you need to do is decide how many midpoint lines and labels that you want to have in historical sessions. Keep in mind that in historical sessions, the only lines you're not going to be able to see are going to be the QL lines. So you have midpoint lines, you have the main key level lines, and we'll just go to that section here. Historical bull bear key price level, historical RNS levels, historical midpoint lines. Furthermore, you can do historical YDH, YDL, and YDC, and also historical PML and PMH. For our purposes of this video, we're just going to go ahead and turn on all of them. Now, one thing you need to keep in mind with historical sessions, the amount of historical sessions you're going to be able to look at is going to be dependent on two things. One is the chart time frame you're on. The second is your TradingView plan. Every paid TradingView plan has a limit on how many historical bars you can look at. So if you're on a 2-minute chart and your plan calls for 10,000 historical bars as the max limit, then your max limit is going to be 10,000 2-minute bars. You have to keep in mind with futures that futures trade 5 days a week, and starts on or at least the ES futures do, and Q as an example, and that's what we're going to use as an example here. Starts at 6 p.m. Eastern on Sunday, runs through 5 p.m. Eastern on Friday. So there's going to be quite a few 2-minute bars in a day based on that. It's not like say SPX, where SPX is just 9:30 to 4. So we'll change this for right now to a 5-minute chart. So you're going to be able to look at more sessions on a 5-minute chart than a 2-minute chart. You're going to be able to look at more sessions on a 2-minute chart than a 1-minute chart. You're going to be able to look at more sessions on a 10 or 15-minute chart than a 5-minute chart. And you're going to be able to look at more sessions on a 30-minute chart rather than a 15, 10, or 5-minute chart as an example. So it depends on how many sessions you want to look at and how granular you want to look at each particular session. Now, one thing we didn't do yet is we didn't turn on the historical market scenario labels. So now we'll go down and do that. Market scenario labels show historical session. And we'll also show the current one. Now you can change these, as we mentioned earlier. You have here in this section, scenario label size. It's now set to normal. So you can change this. You could make it large. As an example, you could make it larger than that if you want to go huge, or you can make it smaller than normal with small or tiny. Now we don't have an offset for these to move them like we do the line labels, so that's more going to be a function of how you have this spaced out here. Now keep in mind the beginning of each session is going to be the 9:30 candle. Now, one thing you want to keep in mind with historical sessions is that you're not going to have line labels for each session. So we don't have historical line labels. There is a limit on how many plots you can do and how many labels you can do in TradingView in the coding, so it's just not feasible for that reason. But one thing you can do is you can change the line size, the line width, excuse me. For particular lines, you can also change the color of the line, and you can change the line style to make them more easily recognizable for things you're trying to key in on. So as an example, let's say here we have the PMH and PML. This is the PMH, that's the PML. So let's just say that we wanted to further differentiate that, and we wanted to make the PMH color, say for example, a light green. Now it's a light green. We could also change the width. Let's say we wanted to make it 5. Well, now it's 5. Same thing with the PMH. Let's say we wanted to make it 5, and we wanted to make it more of a lighter pinkish color. So now, if we're trying to look at PMH and PML each day for our particular reason, changing the line width and the color can be useful in that aspect since we don't have the line labels. You could also change the type of line it is. So we could go, say, dashed, and now we have this look, if that makes it easier. Now another thing is, let's say that the bull bear key price level, that's yellow, that's easy enough. But let's say that our main concern is R2 and, excuse me, R2 up here and S2 here. Then you can do the same thing. So let's say as an example, we wanted to change the S2 color to white. We wanted to make the width 3. And now that's the S2 color. And let's say the R2 color, we wanted to change to bright blue and also make it 3. So now as you can see here, we have R2 and S2 further defined. So if we're looking at basically this is the box PMH, PML, R2 and S2, and then we have the bull bear key price level. We have the midpoint above the bull bear KPL, and we have the midpoint below the bull bear KPL. Then we have this midpoint here, which is mid S1, S2, and then this is mid R1, R2. So the point I'm just trying to make is you can change these lines, colors, line widths, line styles to help differentiate certain levels more when you're looking at historical sessions, if it makes it easier for you. Some people may think that it's fine the way it is, already in the defaults. That's just up to each individual. And as you can see, where these kind of do this here, that means a new session. It'll kind of be different with each new session, but you can generally get the idea. Some of them will just be straight down like this. Other times it'll be just a little thing like this. Now, if you go down here and change this to RTH, then as you can see here, it doesn't work. So that again is one thing we brought up earlier in the video, and it's also in the user guide manual, that when you're using this indicator, you always have to have your chart setting set to ETH, electronic trading hours, is what it means on some charts. Other charts, it just is extended trading hours. So just keep that in mind. So as you can see, this is going to be a function of the chart time frame that you have, how many bars you can go look back at. Now in this, this is the most current session. Now if we start looking back, we're on a 5-minute chart, we can basically take an overview of like 3 sessions at a time. If we want to drill down more, then I'm on a 27-inch monitor here. If you have a very large monitor, that might be one of these double 2-in-1 54-inch or 60-inch monitors, then you'd be able to look at more. But this is basically a 5-minute chart. If you're going to do something like a 2-minute chart, as an example, then you're probably just going to be able to look at one at a time. Because again, you have to keep in mind that futures not only has the New York RTH session, it has the entire overnight until the next 9:30. So we're going 9:30 all the way, including the post market after 4 p.m. into 5 p.m., then starting back up at 6 p.m. into the overnight all the way back up to 9:30. So you just have to keep that in mind if you're looking at 2-minute charts. Looking at on something like a 10-minute, we'll get rid of this here. As you can see on a 10-minute chart, you can start to see, more on one screen. Go to a 15-minute. Once you start doing this, you probably need to just go ahead and change your scenario label. See if you put it back to normal, then it's contained within the session. If you look in the historical session analysis part of the user guide manual, there are many pages there that go over all the reasons why the historical session analysis is important and how it can help your trading. We're not going to go into that into this video. I would simply look at this video and then also read along with that particular section, which takes up several pages in the user guide manual. And then you'll see all the different reasons how this can help you in your trading. So now we're just going to move on to the next topic. Okay, the final topic we're going to look at for closing up is the alert system. So we're just going to go over this part about show last alert only. So as you can see here, I've turned on the crossed and closed above alerts. Also turn on the BBKPL alert. We've turned them on for several different levels here. Now if I turn on show last alert only, then as you can see here, it's still going to show me all the different alerts. It's just going to show me the last alert for that particular one. So you have the 9:30 opening candle BBKPL, which has a different label than the rest of them. Then you have this close above the BBKPL, close above PMH, close above R1, close above R2, close above YDL, close above YDC. Again, when you're looking at doing trades, you're also looking at confirming with the ribbon. So we'll take a look at that again real quick. So again, you're looking for confluence, confirmation of the ribbon also being the same as the cross and close above alerts. You don't have to use the cross and close above alerts. Some people prefer not to have, they prefer minimal information on their chart. With the ribbon here, it is, you know, quite a bit of stuff on the chart. So it just really depends on whether you just want to have the BBKPL 9:30 a.m. Alert only, and then just go visually off of the ribbon with the particular things, or whether you prefer also having the cross and close above, below. Now, typically, it's best once you get into a session outside of the initial BBKPL alert for either above or below, confirming with the ribbon. Typically, I mean, every trader is different. Typically, it's best to look at um, the session, at least in my opinion. Again, every trader is different. Look at it sort of in segments. Where are we generally? What's going on in the market generally? And whether you just want to focus on bullish trades or bearish trades, or trades off of specific levels only, whether they be bullish trades or bearish trades. So again, you have the market scenario analysis that today was telling us that the market likes to trade back up the dominant trading tendency. Again, we'll just turn this on again. We'll turn off this table here on the bottom. Market often rallies towards YDL to fill the gap. So there's a lot of other information here, but that's one of the main things out of this is that particular tendency. So as an example, you just want to keep in mind that combining the dominant tendency of the specific market scenario that you're in with your trading strategy. So, we're getting up movement. We have a green ribbon, and we have a dominant tendency to at least try to trade back up to YDL. So in this case, we're primarily looking for, even though it's gap down, because of the dominant tendency, a move back up to YDL. So we're primarily looking at up moves to YDL. Now, that doesn't mean, like we said, in every session that 100% of the time under this market scenario, that it's always going to trade back up to YDL. That's just the dominant tendency. That's what happens most of the time. That's why it's the dominant tendency. The point that I'm simply trying to make is that is don't try to trade every single up and down move. Don't try to trade, at least in my opinion, it's a better idea not to try to trade every bull move and every bear move, every close above a level and every close below a level. Okay, that's typically not, you're looking for the better entries, less entries, better entries, more qualified entries. So that's why we have the ribbon indicator to help us as a free tool to help confirm entries. So rather than taking a bearish trade here on this close below YDC, the ribbon is still primarily all green. When it does this, it's got a few red up here. If you made these more translucent, you would see that a couple of these bands now are red, but that doesn't mean that we're starting out into a bearish situation. So where you're having, you know, when you have an actual red ribbon with a close below a main key level or primary contextual level, then that's different. When you have a ribbon that is multicolored, regardless whether you're getting a bullish or bearish signal, that's generally not a good trade to try to get into, because basically what you're doing is you're trying to trade into chop, not something that is a clear defined situation. So you want to try to stay away from chop. Chop will eat through your account very quickly. If you try to take every single trade on every single move, that's generally not a good idea. So just keep that in mind. That's why it's a good idea to use confirmation indicators, whether you want to use your own confirmation indicators that you already are used to using, or you want to try to use one of these two ribbon indicators that are free on TradingView as your additional confirmations as well. Okay, so that's going to wrap it up for this video. Again, take a look at the user guide and manual, and we wish you much prosperity in all of your future trading. Thank you.